Welcome. It is Wednesday, August 15th. We're halfway through the month, and it was quite a fugly day today. Huh? Anyways, let's get started. While we're waiting for people to sign on, we'll go through some of the legalities. Past performance is no indicator of future performance. We're not registered investment advisors. The show is for entertainment purposes only. Anything in this show is not an offer. Nothing in this show is an offer to buy or sell any security, option, or anything like that. Okay, this is for fun. Let's have fun together. Wet the whistle before I start running my mouth. And we'll wait till somebody signs on here before we get started. But yeah, always read the disclaimer. You know, we talk about it every show. Always read the disclaimer. It's really important. You should get into that habit. It's a good habit to be in. So let's make sure our squelch is right here. All right. So we've got some people showing up. So let's go ahead and get started. So it was a fugly day today. Huh? You know, it opened up really deep red. And then we got that first bar of the day, that first 5-minute bar. It was a big old green one. Look like hey, Jeff, we're doing great, man. I get to the comments in just a second. Thank you. Thank you for coming in. You know, it was, and we kind of got bit on that green bar. If you bit into that green bar, don't feel bad, because so did we. What happened was we bought the dip this morning. We bought some Qs. We bought the 181 calls. We bought them for next Friday, and when we bought them, they're a little over $1. And I think they closed at about 88-90 cents. But we were like a lot of people, you know, that thing opened that big gap down there. We got that big green bar in that first 5 minutes. And so we kind of rushed in to buy those Qs. We were going to be a little patient, but, you know, we let our emotions get to us. And what ended up happening was we probably paid a little bit too much, but we're real confident with the trade. You know, we're not looking for pennies on this trade. We think there's a big recovery coming in the NASDAQ, and we'll see how that goes. Welcome, Roland. So let's kind of get into the market, Jazz. You know, it's just a turkey saga continues. You know, it's the same old, same old. They're firing back now with the old counter tariffs on beer and some other things. And Erdogan is calling for the people of Turkey to stop buying American tech, which includes Apple. Good luck with that. The big news today, stock-wise, was Macy had a big miss today, and it got crushed. You know, and it's kind of interesting because retail sale numbers came out today, and they were fantastic. So it's kind of odd, right? You know, you've got a sector which, as a sector, is showing great growth and great sales and stuff. Then you've got these micro sections of the sector, which are like your stores, which are Macy's and things like that. Macy's obviously is not benefiting from this big retail rush, but that doesn't mean to give up on retail. And for you guys looking for an ETF to play the sector, because sometimes that's easier, right? You've got a good economic report and it says the sector's doing great and things are going off and all this stuff. But what happens is you've got these stocks that aren't reacting, or whatever they're doing isn't getting them the benefits of the overall sector move. So Macy's is one of those. So if you guys want to play retail and get a basket of stocks rather than get stuck or married to one stock, you buy XLR. That's the retail ETF, and it's actually kind of cheap right now. The chart looks decent. So for you guys that like retail out there, go ahead and check that out. The other big number today was home building. The home builders went into a bear market today. For those of you that aren't familiar, ITB is the basket of home builder stocks, construction stocks, and it's so damaged right now. It's entered into bear market territory. So, you know, that's kind of an interesting situation because, you know, the beginning of the year, the big push was on Trump's infrastructure plan. Well, with all this other stuff that's going on, that infrastructure plan kind of just slipped through the cracks or got put on a desk and forgotten. And we're not getting anything from that. We've got the trade war going on, which he promised, but we're not getting the infrastructure purchasing and stuff. And that's probably hurting the home buyers. Prices are hurting too. The last few reports we've got have been nothing but higher home prices. You compound that with the wage situation, and people just aren't able to buy homes right now. In Hawaii, it's very evident. I mean, They're selling studios. I see Joe from Kali. He just joined us, and he can back this up. They're selling some of these studios for like $1 million, and they're literally studios, hole in the wall, man. You don't even have a kitchen or anything. It's $1 million. So that ITB is in the bear den now. So if you do play constructions like KMI or anything like that, be careful. And also too, for you retail buyers, getting back to that stream, be careful with the Home Depots and stuff, the Lowe's, because as people stop buying houses, as people stop renovating, as people stop doing second mortgages and things, that it trickles down to the Home Depots and stuff. So we want to be very careful over here. There's also an article today about how they might actually be forced into slowing down the rate hikes. This could be a big storm brewing for later in the year. Now, this is not going to immediately affect the market. It's going to cause blips like it did. But really, the overall swing down today's market was based on the turkey and the overnight and stuff, and the trade rhetoric going back and forth. But we want to be careful when we're planning for December and January of 2019, because this home builders, you combine this home builders not doing well, wages not increasing, all this stuff together. This could be a very, very bad storm brewing for the markets, maybe early in 2019. We don't think it'll affect our bullish outlook on the market the rest of the year, but it's something to take a look at. Another thing was, and this is actually good, right? Oil was down another 2.3%. So as citizens, we like to see that because then we pay less at the pump. But as investors, we don't like to see that because commodity prices crashing are not usually a good thing. We're still long gold, and gold had a big pullback today. I think spot was down $16, $17, but we're not worried about it. We got in a little bit early. We wanted to get in around that 1200 because we felt like there were two key spots where it could bounce. One was at 1200 and the other one was about, I think it was 1185. But we're right around that second one now. So now we'll look at the trade real closely should it break down any further. Gold's just not getting any kick. Geopolitical risk are all around, but it's just not getting any kick for some reason. So we'll see what's going on with that. It definitely is oversold, and we're looking for a bounce. So yesterday we gave out a free pick, right? We gave out those Netflix puts, and Netflix was down. Let's check Netflix real quick. We didn't really watch it today. Netflix, yeah, it was down about $11. After hours, it's pretty even, so it's at 326 right now. Remember, on those options, our target is middle of November, be about 280. For those options to be nice and profitable, they don't have to get to the 280. Actually, I believe it's before the end of September. If they get to, I think, about 305, you'll have a nice tidy triple-digit profit. And that's interesting the way that's going, because Netflix, there was a big article on CNBC today about Netflix, and what they were saying was with Netflix, let me take a look at that article real quick while we're talking about it so I don't give you bad information. But with Netflix, they're spending more on these individual shows, these exclusive content and stuff. But it turns out that of all the streaming media and stuff, like your CBS and all that, they keep the most profit out of that. So, it's kind of a double-edged sword there for Netflix. We still don't like Netflix going forward. What happens with Netflix is they pay more for their shows up front, but on the big hits, they keep more of the profit. Now, the trick to that is you got to have hits, right? And lately, Netflix hasn't had a whole lot of that. I think the last one was the Ozarks, right? That was pretty good with Jason Bateman. But the other one, there's another one that kind of sci-fi one. And other than that, I mean, look, you think about it, we should be looking at the release of House of Cards and stuff. And, there's no more House of Cards, which was a major part of that franchise. Ozarks, one show is not going to keep people subscribed. Hulu is really stepping it up with the weekly programming. I think they just cut something with the NFL. Twitter just cut something with the NFL to stream games in it. Netflix is just getting left behind. Um, people still like to go to the movies. There's just a whole event to it, right? Whether it's with a girl or with the family or with a guy or whatever. It's kind of an event and stuff. So people still like to go to the movies, but when they watch streaming media, they're more discerning of viewers, and that's a proven fact. So you really got to keep them engaged on Netflix. We don't think they're putting out stuff that keeps them engaged. Elizabeth Warren today came out with her Accountable Capitalism Act. And what this is she's come up with this plan to, she wants to, what she wants to do is make these top tier companies pay more, and in turn that should produce some money for the less fortunate and stuff. But unfortunately, we had a couple Harvard professors come out and just rip that apart. And the biggest thing is it punishes the honest companies. It doesn't punish the cheaters. It actually benefits the cheaters because they won't be the ones paying. But other than that, there was a little bit of Bitcoin talk today, right? Bitcoin had a little recovery. I believe it got up to about 6,400. But again, remember what we always talk about with Bitcoin, the bubble. Is it sucking them in so it can break some hearts, right? We did it at 20,000. We did it at 15. We did it at 10. We just did it at 8. Let's see if we do it again at 6. We're still not sold on Bitcoin. Now, look, if you're not getting what you need from your portfolio, if you're not even in the market, if you want to be in the market, definitely click that link. One of the big things about this service is, and we don't push this service, I don't really get into it. If you want it, it's there. If you don't, that's fine. But you will find that this is the most complete service you'll get. This is a great family environment. It's very engaging. It's very educational. It's a lot of fun. Even on days like today, we had a lot of fun this morning. We were buying the dip. We were watching the NASDAQ kind of bounce around. Had a good close. But if you need that kind of help, if you want that kind of support system, there's a link right there. Just remember, we're going to make money with or without you. So why not? Other than that, it's just been kind of a ugly day. Let's look at the numbers one more time. The Dow was down about 0.5%. It was down way more than that. At one point, it was down way over 300 points. The S&P closed down about 0.75%. It's not too bad, a little pullback. Hey, we've had some strong gains lately. The big one was the NASDAQ. That was down about 1.25%. And that also makes sense too, right? We've had these big runs on the NASDAQ lately, and it's just really been a strong market. So a pullback today made a lot of sense. We'll keep an eye on futures overnight. Like we said, we bought the dip this morning, so we're in the queues. We bought those 181 calls for next Friday, and we're happy with the position. We bid a little bit on that first big green bar in that 5-minute bar. But we're still very happy. We're looking for a nice huge gain on this. And as we've been talking about, we've got a couple options expiring on Friday that we're trying to get out of. We got one in Twitter. Twitter had a rough day today. Snap had a rough day today. We're going to keep an eye on those and we'll work our way through them. But our big play is, like we say, we're long gold right now. We think it's about to find a bottom. We think it's going through this capitulation right now. It had a decent day yesterday. It had a sell-off again today, but it looks like it might bounce at that support. We'll keep an eye on the trade there. Oil, there potentially is a trade coming down the line, so we'll keep you informed on that. But you guys as traders and wealth builders, you guys keep an eye on it too, because it down another 2% today. It might be a great buying up, right? A lot of people were calling for $100 oil at the end of the year. What we always talk about, nothing goes straight up, nothing goes straight down, right? So you have pauses in between. The pauses are where you want to buy. Speaking of pauses today, who do you think's been loading up on Apple? Warren Buffett, right? The sell downs don't scare Warren. He knows. You buy when they sell, you sell when they buy. Right? You want cheaper prices? Well, the stock has to come down, right? How many times have you seen people say, I'd like to buy so-and-so stock, but I don't want to pay so-and-so for it. I'll wait till it pulls back a little bit. Then it pulls back and they're like, oh, no, the thing's going to crash. I don't want it now. It's like, come on, buddy. Either make the deal or don't. Anyways, so look, it was a great day today. You know, for a big blood red day, we had a lot of fun in the group, and we're gonna have a lot of fun tomorrow because it looks like the Nasdaq's found a nice bottom and stuff. Doesn't look like a whole lot of questions, but I did want to do a shout out to Jeff. Hey, thanks for joining us, Jeff. You've been we noticed you started following the show earlier in the week, and we're so glad to have you. The rest of the gangs here, shout out to the SPP people, because it doesn't look like there's any questions. So I'm gonna give everybody one more chance to ask any questions if they got any questions. Other than that, it's hump day, right? Everybody wants to kind of just go relax, lick our wounds from the day, and we'll get back at it tomorrow, right? So all of you, I think we'll cut the show here. Like I said, it was a red day, but it was a decent pullback day. It's not like the market just crashed or fell apart. It wasn't April all over again, down 700 points, circuit breakers going off and everything else, right? So look, if you guys aren't having fun, if you guys aren't enjoying what you're doing, if you guys aren't getting a kick out of it, here's the link, okay? Because look, we had a blood red market today. We had a lot of things looking ugly, a lot of bad things in the news and stuff like that. But in our group, we still had fun and we're still positioned real well. I looked up QQQ and a strike stop. No, you're looking at it's wrong. I will meet you in the club page, okay? I'll help you out. Give me about 5 minutes and the team, somebody from the team will be with you and we'll get you hooked up on that. Still time to buy. It's still below our buy range. So yeah, that's a question for the group, and somebody from the trade team is in the group right now, so they'll address that with you right away. Okay, but other than that, hey you guys have a great Wednesday afternoon. Like I said again, look, if even on these red days with the news cycle full of hate and the market full of red, you know, if you're not having fun, if you're not enjoying what you're doing, then click the link and just give it a shot. Come see what the happy people are doing. Okay. So you guys have a great afternoon. We'll talk to you guys tomorrow. We'll be back tomorrow right after the market. Meet the trade team in the group and they'll hook you up right away. We'll talk soon. Right back at you, Jeff.